Ethereum's fundamental signal $2,000 ETH price is closer than it seems. What is going on, everybody? Man, I hope you guys are all winning out there. I am winning, and so are you. And in this video, we're going to talk about Ethereum and how $2,000 Ethereum is more realistic than you may think. Both on-chain and trading metrics indicate Ether dips are meant for buying as Ether eyes $2,000. In the early hours of February 15th, Ether ETH price plunged to $1,660, followed by a 9% recovery in 10 hours. The move triggered $280 million in futures contracts liquidation, indicating excessive leverage from the longs. Although the initial anxiety regarding CME's ETH futures launch on February 8th seems to have faded, sustained excessive transaction fees might have undermined investors' confidence. Nonetheless, the fundamentals behind Ethereum remain solid, indicating ETH price should promptly recover from eventual dips. Even though the above metric might be interpreted positively, not every user can afford a $12 fee. A simple token swap on decentralized exchanges, DEX, can cost hundreds of dollars in gas fees, leaving small traders no choice but to abandon the network. And we actually just talked about this in my previous video. You can go ahead and find that on my channel. Don't forget to subscribe to Win with Ryan. You can check us out there. Make sure you hit that subscribe button. Make sure you hit that little bell icon so you're signaled with all of our future videos so you are not left behind on the upcoming bull runs. Multiple proponents are testing sharding and layer 2 solutions to circumvent this issue, including Scale and Optimistic Network. ETH2 will use sharding to split the blockchain into several parts and increase the number of transactions the network can process at once. Here is the median transaction fee for USD right here of $2, $4, $6, $8, $10, $12, $14. And here's the dates on the bottom. And you can see as Ethereum continues to grow in price, the fees of using the transactions are significantly spiking as well. Total value locked remains in an uptrend. The phenomenal growth of total value locked, TVL, in decentralized finance projects can't be disregarded. The adjusted metric attempts to clean regarding the ETH price increases, therefore providing more reliable data. As depicted in this chart, the 34% increase over the past 30 days falls in line with ETH's 38% gain in February. Regardless of the transaction fees, there is still value created by automated market making, pools, and staking mechanisms. To better understand whether the recent crash reflects a potential local top and subsequent downtrend movement, one needs further data. Besides price action and technical analysis, investors should also gauge on-chain metrics such as network use. An excellent place to start is analyzing transactions and transfer value. All right, so here you can see the chart. This is the adjusted transfer value, and you can see the transfer value here, 43.18 billion, and then the adjusted transfer value of 20.66 billion. And as you can see over time, this is increasing. It looks like it's reached a little bit of a top, and we'll see how can Ether recover from this issue, because it is an issue and a lot of people are recognizing that. So what are the solutions? And there will be solution. Coinmetrics data shows that 14-day average transactions and transfers rallying above $9 billion in daily transactions, a 32% increase from the previous month. This significant increase in transaction and transfer value signals strength and suggests that Ether's price is sustainable at current levels. Okay, so here you can see the February 14th of 2021 ETH transactions, transfers, and value adjusted is the dark purple line, and you can see it's continuing to rise. And then you can also see the price, which is the shaded purple area below it. So the price and the transaction fees are in line, which means that it is a actual fee that can sustain at this price and at this value. But there could be a solution when version 2.0 comes out that these gas fees can be reduced. Exchange withdrawals indicate long-term holding as well, although there is no consensus among analysts on short-term price impact of exchange withdrawals. Its effect is either neutral or bullish. The opposite movement, large continuous inflows, is the only bearish scenario, as it indicates holders' willingness to sell their coins. From January 1st to February 15th, roughly 600,000 ETH was withdrawn from the exchanges, regardless of if it's whales or whales are transferring to cold wallets or putting Ether into DeFi ecosystem. Those coins are less likely to be sold in the short term. Considering this movement happened while Ethereum made a $1,870 all-time high, the indicator indicates holders are confident. To conclude, based on both on-chain metrics and trading perspective, there are encouraging signals that $2,000 is within reach and that dips are being bought aggressively. The views and opinions expressed here are solely those of the author and are not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research. Now let's take a look at the chart. All right, so this is the daily chart here, and these are some of the tools that I use for maintaining a positive outlook or negative outlook on coins. And currently, so we have a 50 moving average close, which is actually climbing, which shows positive news. I also have here the EMA of the 5, which is the red one, and the 9. Now, when I do day trading, the 5 and 9, when they cross over, that is the indication that I look for it to be a trend reversal. And what I mean by that is right now, if you can see, the red line is riding up on the price. If the red line crosses that blue line, that is a signal that there may be a pullback. And the last support level that was significant was here at 1475. So looking at this though, it ran down and then the bulls bought it back up. It ran down. The bulls bought it back up again. So that's showing that the bulls are definitely still trying to maintain the positive momentum of ETH on one-day chart. So let's take a look at the 4-hour chart. Okay, so here we are on the 4-hour chart, and this, you can see that the moves are a little less significant, more of a consolidation, right? So it did come down on the 4-hour, it hit that 50 and it bounced up. So it's staying positive, came back and hit that 50 again, bounced up. And now it's kind of just chilling right here in this consolidation pattern, and it is bouncing off the 4-hour 50. So with that being said, this right here, if it's going to be on the continuation of the bullish pattern, you can see that every time it hit this 50, it made a nice up move. Hit 50, nice up move. Comes into this little consolidation, it's hitting this 50. So we're gonna have to see here. The only difference right now is the psychological barrier of $2,000, which is becoming a real barrier. You know, like it should have already broke through there with the positive momentum. The gas fees are what has been taking this and, you know, basically subduing the big rally that was going on. So we'll have to keep an eye on this. If we look at the 4-hour chart and see right here, the red has crossed that blue, which would indicate a potential sell-off, and it did, and then it bounced back up. So we need to see if this is going to break back above that. This 4-hour candle closes in 2 hours and 50 minutes, so 3 hours. So it was a very negative candle here, and then it ran back up. So we're going to see if the bulls and bears win this. Let's go check the 1 hour. All right, so here we have the 1-hour chart, and you can see it was running up nicely, and then all of a sudden the turn down started. And you can see that the the 5 crossed over the 9 and the 50 on the 1 hour. So we may, if this doesn't correct here over the next couple of hours, we may be going back to this support line again, because you can see last time when the red crossed over the blue and the 50, it came down and did its correction that it did yesterday morning. And that was all the way back to 1660. So keep an eye on this. This might be a really good spot. You know, if it comes back down here and taps it again, this would be a great spot to buy. If you're in a trade, you know, by the way, this is not trading. This is not advice. It's not financial advice. It's just my knowledge that I've gained so far and what I'm learning. And I want to share that with you. So this is just for educational purposes only, but I did want to share that information with you. And if we go down to the 15-minute chart, and the 15-minute crossed over, but you can see here, this is on the 15-minute, this has become a support for the 15-minute. So that's really good news too, because right here, you can see these green lines indicating a support that it's around, you know, 1750, and it did have a wick down, and now it's running back up. So we'll see here on these charts, if it can break above this right here, which is this new short-term resistance of 1780, we could see a good move. Let's go to the 5-minute chart. And as you can see, we came down, we tapped off that new support level, ran back up. It's hitting this resistance multiple times here. And it is, the red has crossed over the blue. So this could be like a make or break moment right here. If this candle can go above this resistance line and then hit this 50 and then break through that, we should see a nice up move coming. But we'll have to take a look at that. So we have 3 minutes left on this candle right here. So hey, comment down below, by the way, of where do you see ETH going in the short term? Are you seeing it going up to 2,000? Are you seeing a correction? What is your guess? Where are you going with? Are you bullish? Are you bearish? And also don't forget to subscribe to the channel. Make sure you hit that subscribe button and hit that thumbs up. Help the algorithm for our channel. Let's take a look here and see what happens. We can even go down to the 1-minute chart and really see what's going on. And the 1-minute chart is just flat. So you can see here, it's coming in this little range, like a little order block. So right now, what's happening is the buyers and sellers are determining where it's gonna go. So who has, it's like a tug of war, right? So, all right, the buyers are running it up. Oh, the sellers are starting to win. Oh, the buyers are winning. Oh, the sellers are winning. Oh, the buyer, and then it's just kind of chilling right here. So we really need to see if it can bust above there. And what we want is these candlesticks for the bull run. You want the candlestick to close above the previous candlestick, and then another one, and then another one, indicating an actual bull run. So you can see these were too even. They're called the railroad tracks because they look like railroad tracks. And that is typically a trend change for the positive, but we're gonna see here. So right now it's trying to work its way above that previous candle. The resistance line is currently here as well at that 1780 mark. All right, so boom, we got 2 in a row in the green. The red is showing the up move, but there's a lot of indecision in the market right now. So we're just gonna have to take a look at this. And by the way, if you wanna check out this chart, you can go to tradingview.com. It's free, get a free account there, tradingview.com. You can watch the charts in real time. This is considered a candlestick. You've also got up here, if you look right here, this is the line chart, but the candlesticks are where you get your most information, where you can pull the most out of the actual market and see what's really going on. So on this short term, we have some bearish momentum for sure. As you can see, it's just going down from this point here. That's our trend. Let's go ahead and get the line. So when you draw the trend line, it's nice. You need to make sure that it hits at least 2 spots along your trend. There we go. So let's turn some of this stuff off so it's not as messy. And now you've got, that's our trend line currently. Okay, so we're currently trending down. We were in an up move. It broke market structure there. And we're going to see what happens. So now that we've got our lines for sure lined up on the close of the candles, let's go back to candlesticks. We'll see what happens. So will it make its way back up to this little trend line and break above that? Let's go check that 5-minute again. So the 5-minute candle, the previous 5-minute candle that just closed, that last minute, was a bullish engulfing candle, meaning it engulfed that whole body. The wicks are important, but the bodies are what's the most important. And this candle fully engulfed this one. So we'll have to keep watching this because right now it is on a little bit of a down move. But if it can break through here and go up above, it can continue its rise right now. We want to see it hit $2,000. It's got all of the fundamentals. Just this technical analysis is preventing it from running up there right now. All right, guys, so make sure you go to tradingview.com, get this, mess around with the charts. I hope this was helpful. We got to get over 2K Ethereum. See you soon.